Good morning, I'm Clinton Griffiths. Cattle futures seeing red Wednesday following strong market action during Tuesday's session. Analysts at Top Third say this week saw the biggest two-day rally in the cattle complex since the lows in October. Now, before Wednesday, a $5.50 rally in February live cattle and a $7 rally in March feeders happened in less than 2 days. Markets pushing to fresh multi-month high nearly across the board. However, as 2016 taught cattlemen, markets can fall just as fast as they rise. In fact, last year may go down as one of the worst in history for the cattle industry, with losses as high as $700 to $800 per head. For many, using futures were a challenge due to volatile swings up and down, and cattlemen say the problem started when the futures went electronic, allowing high-frequency traders to manipulate the market. So, for the last year, NCBA has been working with the CME Group to pinpoint the problem and try to find a solution. Michelle Rook has more.
Volatility has plagued the cattle market for the last 18 months, leading many cattle producers to claim the futures market is broken, including Brad Koima, who serves on the NCBA Working Group addressing the issue.
I mean, anybody that lived through last year's deal where literally you get up to get a cup of coffee and the market changes $2.50 a hundred, are you kidding? A 41% change in price?
Leading the group is Nebraska cattleman Craig Gooden, who recently spoke to South Dakota producers about the solutions they're working on.
Price discovery, volatility, and contract specs and delivery points being the third.
He told producers algorithm traders are causing the volatility, and so they've asked CME for an audit trail.
We can't disclose who is holding positions or who is trading in our markets. We're prohibited by federal law, by our CFTC regulations, from disclosing that.
They're also working with the CME to change contract specs.
We think we can address some of the volatility by making the contract more uniform and more representative of the cattle we produce.
Beyond the futures, producers say the other problem with the cattle market is the lack of cash transparency. To address that, the industry is encouraging less contracting directly with packers. Plus, they started an online trading exchange.
I think the organization is going to push harder to say we got to have a viable cash market so we can also figure out what a viable futures market ought to look like.
In turn, the CME proposed a cash-settled index for the live cattle futures, which the industry opposes.
So what we're looking at is taking those formula reports that USDA collects from the packers and then reports back to the public, and seeing if we can use that data to create an index.
Past South Dakota Cattlemen's president Ted Wilkinson says whatever the fix, it needs to be done soon so producers have a viable price risk tool.
The volatility in the CME has made it almost impossible for a producer to effectively manage their risk.
And without that insurance, he says more cattle producers will be forced out of business. I'm Michelle Rook reporting for Ag Day.
Thanks, Michelle. The CME also proposed a hybrid delivery system for live cattle where certain areas of the country would use sale barns for delivery points and other areas would use feedlots. All of these proposals are still under review.